Hey, good evening, guys. Just wanted to go over a quick overview of the S&P 500 as the bots in crypto are just kind of fib fighting. Um, but one of the things that I'm looking at here is the possibility of some pretty juicy trades here. If you let's just start from the beginning here. This is the daily chart, and I am actually seeing this as a possible completed market cycle up here. I've gone through all the subwaves, and it looks like we have a very clear 5 wave up, and we are now correcting the crash or the correction that happened around Christmas time or a little before. Looks like just the start of the correction to me. This looks a little bit like a dead cat bounce here. If you go through this, we have a very clear 5-3-5 correction down. Interestingly enough, and I'll get to this in a second, we did not touch our support here, which, you know, is that bullish or bearish? We'll see. But normally, you like to see a support touched. I typically don't like big bounces when everybody is front running the support. In other words, people are buying, anticipating the support holding before we even get there. That generally, in my experience, just leads to just it, it prevents resolution, basically, is what I'm trying to get at, because we really didn't confirm this support, and this support is about 10 years old, and I'll go back to that in a second. But we have a very clear 5-3-5. This is a very clear impulsive 5 wave up here after the 5-3-5. So we could have, and I'm sure many are seeing this as, okay, ABC, we're done with the correction. We have a 5 wave impulse. Fantastic. We're going to now go off to the races, try to put in new highs. And I'm not saying that that's not going to happen, but what I am saying is, if this is in fact a completed market cycle, which if I just come back down here, I mean, this looks completed here. We had a little bit of an extension here in the one. I mean, this is very clearly 5 waves. So, and this is over the span of 10 years. This is started in March 2009. So it's almost 10 years to the day. So this to me is more likely to be a completed 5 wave market cycle. And we are now, in other words, you can't have, not that you can't have, but the probabilities are you have 10 years of bullishness. We just completed 5 waves up. I do not think that we can correct a 10-year bull run in one move down and recovery. I don't see that. And the technicals also, would support that idea that this is just the beginning. This is a dead cat or the A wave. We're going to put in W. This is a 5-3-5, so ABC, ABC, ABC. If this is to play out in this way, this would basically be a WXY. And some of these trades that I've labeled here, this would be a short position here. And not just because this also it is very technical as 5 waves are completed here. So no matter what, the probabilities are that we are going to come back down and correct, even if we are going to push higher. Either way, we need to have some type of correction here, off of this impulsive move here. So, but what I'm proposing is that this, in fact, this move down, this crash, this drop was in fact just the beginning of a WXY correction, or at the very least, a possible two-wave here. But either way, like I said, we should come back down and correct a little bit before pushing higher if we are going to, in fact, challenge this high up here. So as you can see, I have this labeled on this chart, 6-to-1 risk reward. If you were to enter here, I would put if you're going to short this, I would not give this much room, because I feel like if we're going to correct, we're going to correct now. And if we're going to push higher, then you certainly don't want to be in a short position when the price is possibly threatening all-time highs, and then basically there's just no resistance at all, and the sky is the limit basically. So I would not give this much room. I have this listed here as if I were to short this, I'm looking at a stop loss at about 29.10. So that's a little high. It's a little bit, you can tighten up if you want to, but and the target I would have would be at around 24.58, possibly as low as 23.65. But basically it's a 6-to-1 risk reward if your stop is hit. If you wanted to give it more room, which I certainly don't suggest doing this, but you could just put it here at the previous high back in September. But as far as I'm concerned, I would not give this much room, because I feel like I said, if it's going to correct, it's going to correct now. Basically is what I'm saying. So you have, you could, if this count is to play out, you're looking at 6-to-1 short, 7-to-1 long, 10-to-1 short. So the possibilities here are just insane with the possible volatility that we're going to see. So just some ideas on what I'm seeing. Like I said, now I'm going to go back to this trend line that I've drawn. This trend line is basically the entire uptrend from 2009. So, as you can see, we tested it here, we tested it here, and we shied away from it here, which is actually interesting, because I don't just pull these random this ABC correction or part of this WXY. I don't just pull these boxes randomly. They're all fib targets. So I did not just put this box here because the trend line is here. I put this box here because this would be the 618 to the 786 fib retracement of this proposed A wave. And coincidentally, it does in fact land right at about this trend line. And one of the things I always talk about is that trend lines, whether it be support or resistance, typically will break on the third test. So as you can see, we have 1, 2. The next time we touch this trend line, it would be the third time. And one of the things that does happen a lot of times when a market is going through a major correction, which in my opinion, that's what's starting here, and that's what's starting to take place. What you'll see is, yes, on the third time it typically breaks, but you'll see it break, fake out, reclaim it, push back up, kind of chop through it, and that's kind of how the way markets turn support into resistance, and that's basically what's taking place during a major corrective cycle, which in fact, if this is going to play out the way that my gut and my hunch and is leaning towards, that is exactly what's going to happen. And that's the exact kind of action that we're looking for. And it's also not just a hunch. I mean, it's very technical here. This clearly is 5. It looks like a market, the market cycle is over. It's been a decade of bullishness. So, you know, we need to retrace here. Was this enough back in, you know, around the crash around this in December? You know, we don't know yet, but what it looks like to me again is 535, 535, 535, WXY correction. The target would be around 2100 to 2200 before, you know, we can analyze further and before price can potentially push back up and try to challenge this all-time high up here. But one of the things I also want to show is another piece of evidence that leans towards this is that in a 5-wave motive, an impulsive move, or in this case, because it's 10 years, especially, you'll see generally if you pull a pitchfork, an Elliott wave. Obviously, I've already drawn this, but a 5-wave or a motive wave will generally stay inside a pitchfork. A typical, you know, a typical pitchfork. So, and what I notice a lot of times is that wave 4 will break the pitchfork, and wave 5 will reclaim the pitchfork. Or yeah, this is 3, 4. This is the big 5. The 4 will break the pitchfork. The 5 will push up back towards the median line. And so that's just further evidence. And basically, where I pulled this from is I just put this pitchfork on wave 1 and wave 2. That's all I did. And one of the other things that I notice is that just in general, when it comes to Elliott and these pitchforks, is that if you take the pitchfork, and this is a just a, you know, standard pitchfork. I have not modified it in any way or anything like that. But one of the things that I notice now, if I take the 2 instead of just leaving it at the 1, you'll notice now all I've basically done is widen the range of the pitchfork. You notice where this 4 lands. And this happens so often, it's unbelievable. The 4 lands right in the basically the support of the pitchfork. So this also is evidence towards this entire move being over. So, and you know, the reason I bring that up is because if this entire 10-year bull cycle is over and we're now correcting, this crash here, or this correction, is not enough. Just as far as time is concerned. I mean, that's only about 2 months of correction and about 2,900 to about 2,300 in price. So if you're talking about 10 years, a decade of bullishness, that's not going to be corrected in 3 months, if in fact this market cycle is over. So with all that being said, one of the other pieces of evidence that also indicates that this is in fact a 5-wave decade-long market cycle being over is this would be the 5th wave up here. The 5th and final wave is very often, if not always, you see bearish excuse me, you see bearish divergence in the 5th wave. And if I just pull this up here, okay, you can see that on this, excuse me, basically we had bearish divergence right here. We had a lower high in the, let me make sure I get this right on here. Yep, we had a lower high on the RSI, and we had a higher high on the price. Bearish divergence right there on the one-day chart. So if you were in this trade, this would have been, you know, a perfect opportunity to short. All the indications were there. 5 waves completed. You know, 5 of 5, basically of 5 is completed with bearish divergence on the one-day chart. I mean, it just couldn't get any better for a short trade. But the reason I bring that up is because that's another piece of evidence that this is in fact the, you know, a 5th wave being completed. And, you know, that goes back to the idea of we are now going to have a major correction here over a year or two at minimum. So there's some real nice trades here if this does play out. I mean, 6 to 1, 7 to 1, 10 to 1, if you're going to flip flop and play all these positions here. But one of the other things I want to show really quickly is actually, I don't want to move this. I will move this right now just to get it out of my way, so I can show you guys this. And I will actually go now to, I'll go to the 4 hour. If you see here, I'm actually going to draw a trend line of this uptrend here. That's broken, but I don't like that. I'm actually going to move this here. Get this right on here. Okay. So we do have support here. This is in fact the 4 hour. I have it drawn to where it is in fact broken on the 1 hour, and that's basically here. So, and the other thing is that if you just look at this, I mean, you can see that this is massive resistance here. Just as far as, you know, if we were to take these pivots here where we could not break above here, if we just put these on here, let me actually widen that a little bit. Okay, I make this a lighter color. I'll just make it white. You can see where we rejected here. Reject, correct, reject, correct, reject, correct. All the way 5 waves up and rejection again. So this, in my opinion, is showing that the market is not accepting this line. It is not accepting this price. And typically when that happens, especially when you reject, correct, reject, correct, reject, correct further, push back all the way up and reject again, what that normally is signifying is that this resistance here is not only extremely valid, but this move to break this when it was a support here is basically being validated. In other words, the market, by pushing all the way back up here and rejecting again, the market is basically saying this move to break this is now validated, and this is where the direction of the market should be headed. So, you know, something to keep in mind. But That's just basically what I wanted to do. Now, I'm not saying that that has to happen, but when you're looking at things from an evidentiary point of view, this rejection here is validating this drop. If that makes any sense. So, what I'm expecting a pullback now. Expecting a pullback to at the very least retrace and try to push back up. You can see that this is just completely parabolic here. So, I mean, so I think that we are very much due for a retrace here. One of the things that, the RSI is cooling down a little bit here, so but that's about it. I wanted to go over the S&P 500 as the crypto bots are just basically having their fun with people. So anyways, if you guys like the content, like, subscribe, comment. If you guys have any requests, if you want to see any stocks or any altcoins or anything like that, just comment, let me know, and if I have time, I'll try to get to them. But S&P, if you guys are holding stocks, this is stuff you want to know. You want to know where the market is headed and stuff like that. But anyways, thanks for watching, and I'll talk to you guys next time.